my favorite outcome from any of this type of work is when I get messages like, hey, my mom, sister, brother, cousin, aunt, they never understood Bitcoin. I couldn't get through to them. And I sent them the Mycelium of Money article or the Pioneer Species article. And now they get Bitcoin. I play a small role in what all of us are doing, which is trying to explain this thing, because Bitcoin properly understood is going to be demanded by pretty much everyone on the planet. But there is still a gap between understanding and appreciating what Bitcoin is in context. And I think this is sort of a sneaky way to get to those things.
Hey everybody, Tyler Rowe here with the BitcoinTreasuries.net podcast. My guest today is Brandon Quittem. He's written some of the most widely read essays in Bitcoin, the Mycelium of Money, Bitcoin as a Pioneer Species, and Bitcoin in the Rhythms of History. And he spent years at Swan helping people actually understand this thing. So Brandon, welcome.
Thanks for having me, Tyler. Looking forward to the chat.
Yeah, me too, man. So let's dig into it. You've spent years comparing Bitcoin to living systems, like I said in your essays, fungi, ecosystems, generational cycles. So what made biology the right lens for you to look at this thing?
Yeah, good question. So if we rewind history a little bit, I came into Bitcoin, more appropriately, the altcoins in 2017, traded them all, made a bunch of money, thought I was a genius. And then in 2018, market corrects, and I quickly learned I was not a genius. And then I had a period of time where I had to decide, like, hey, am I going to just disappear, tail between my legs, and just chalk it up to a, bullish, naive mistake? Or is there something actually here? And I'm way too stubborn to quit. And so I spent about 3 months in early 2018 teaching myself economics from the ground up, learning from all the Bitcoin podcasts, going to meetups. I was living in Chiang Mai, Thailand at the time. My wife and I were traveling, working remotely for about a 5-year stretch there. And so just full immersion. And through that study, I realized that Bitcoin's actually the thing here. And the altcoins, the blockchain stuff are probably not going anywhere, or at least we should just set them off to the side. And then, okay, now I'm in Bitcoin, focus here exclusively. And then we moved to Bali in Indonesia, went to another meetup, and I saw someone do a presentation on the Lightning Network. And what I saw was, it was very early Lightning Network. So it's nodes and connections, and it makes this graph in a visual form. And what I saw was, hey, that looks like mycelium, which is the primary form that a fungal organism takes, which we can describe. And seeing that, I'm like, okay, what's going on here? Inspiration comes out of nowhere. I ride my little scooter home from the meetup, and I'm just scribbling on paper in the villa there, trying to get my ideas down. And that initial like weird obsession period I ended that period with essentially a fully written blog post, which was part 1 of the Mycelium of Money series. So published that, it goes, mega viral. And all of a sudden I'm anon on Twitter, or not anon, but unknown person on Twitter with a few hundred followers. And then all of a sudden my first essay in Bitcoin goes crazy, which opened a lot of doors in the Bitcoin space, and have written a bunch about it since. But how or why should we even consider looking at biology to explore technology? That seems like a weird connection, right? So a couple things. One, nature has already solved the majority, if not all, of the design problems that we humans need to solve ourselves. And there's a whole field of study called biomimicry, which is exactly what it sounds like. You're mimicking biology. And so, for example, the guy who created Velcro, okay, he's hiking in the woods. He finds those little dried out seed pods, those little sticky burrs. They're all over the world, and they stick to your clothes. They're hard to get off. He takes them home and wonders, why are these so hard to get off? Puts them under a microscope, and he sees this little shape. They're like little hooks. If you're on YouTube, you can see just like tiny little hooks. And that ends up being the inspiration. This guy goes and patents Velcro, makes a bunch of money, and now we have Velcro, right? There's another example of a kingfisher bird, which is an aquatic bird that dives into the water. And it dives into the water in a unique way. It makes its body into this like missile shape going straight down in the water. And it enters the water with no splash. And this ended up being the inspiration to solve how trains can go through long tunnels. So if you picture a train going through a tunnel, what happens is the air drag on the train essentially builds up, and it creates a sonic boom sound going out the other side. And that's very disruptive if you have a sonic boom every time a train drives by. So then I think it was Japan first. They redesigned their bullet train based on the nose, beak, face, aerodynamic shape of that kingfisher bird. And so again, we're stealing all these ideas. The shape of a windmill or wind turbine, those are all based on one of the whale's fin shapes, which has a unique aerodynamic, like just super efficient shape. And so essentially nature, through many cycles of iteration, it sort of perfects how to solve certain problems. Wind drag, make something really sticky, material science stuff, all this stuff. And so essentially nature is a treasure trove. And as long as we have enough humility to go study nature and repurpose those ideas, I think we'll continue to solve our problems. That's one. The next one is, this is kind of a derivative of Kevin Kelly's work, who I highly recommend everyone to read. And Kevin Kelly has a thesis that technology is essentially a derivative of biological evolution. So the same forces that shape biology, which is iteration, mistakes, finding fitness, the best ideas live on. He believes that once you get into the human realm and now we have this more advanced consciousness, that we're essentially just creating tools. Those tools are really more like an ecosystem. We have prerequisites, and then this idea branches off into that idea, and all of a sudden we have this complex ecosystem of technology that we work with. And every time we create new technologies, those technologies obviously help us do new things. But the interesting part is technology actually changes who we are as people, right? If you can ride a horse really fast, you don't need to perfect running. If you have a stirrup on a horse, all of a sudden you can fight better, right? Then we all of a sudden have mounted knights and when armor, and all of a sudden the peasants can't fight back. And now we have gunpowder. All of a sudden gunpowder neutralizes the armored knights with the elevated position on a horse. And so you can kind of see how these little incentives in our technology sphere change humans. Then humans go and create new technology. That technology goes and reshapes us. So there's a symbiosis between humans and technology.
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wish for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
And so essentially, I view them through the Kevin Kelly lens. I think technology is biology. I think it's of the same fundamental forces. And so you add all this up, and to me, why Bitcoin? Why does Bitcoin fit in here? Bitcoin is strange. There isn't really much to compare it to. And so historically people have a hard time understanding what Bitcoin is, trying to explain it. Is it money? Is it technology? Is it a blockchain? What is this thing? And getting to the point here, I think that people intuit biology in a way that they don't intuit distributed systems, finance, technology. And so I use metaphors through examining parallels with biology and Bitcoin in order to explain Bitcoin in a way that I think sinks in a little bit deeper. And personally, my favorite outcome from any of this type of work is when I get messages like, hey, my mom, sister, brother, cousin, aunt, they never understood Bitcoin. I couldn't get through to them. And I sent them the Mycelium of Money article or the Pioneer Species article. And now they get Bitcoin. And so I think I play a small role in what all of us are doing, which is trying to explain this thing, because Bitcoin properly understood is going to be demanded by pretty much everyone on the planet. But there is still a gap between understanding and appreciating what Bitcoin is in context. And I think this is sort of a sneaky way to get to those things.
Yeah, that's really cool. What were the nudges, I guess, in uh, that required Bitcoin emerging as a as a monetary tool, Brandon? Like, was it the internet that finally was like, oh, okay, like fiat money can move over these digital rails, so we need, something as an antidote to that?
Yeah, I think if we go back in history to the late 80s, early 90s, we have the emergence of a group called the cypherpunks. These are like coders, anarchist, super nerd, shadowy super coders before that was named. And what these folks saw was that the way the internet was being built out, they foresaw a digital panopticon being built. We'd essentially turn the internet into a walled garden, which would give, let's say, an overambitious government, state, corporation too much power over our individual lives. They forecasted the rise of digital money and communications. They talked about needing forms of communication that couldn't be spied upon and money to do the same. And so, due to their incredible foresight, there's this nucleus of energy, of excitement, of builders trying to solve these problems. And they were so far ahead of their time that not popular, none of these ideas went anywhere in the 90s. But a lot of the fundamental technologies that ultimately were used in Bitcoin were created from this group. Some of the key ones would be proof of work. So originally, Adam Back was trying to solve email spam. And today, the email browsers or email applications like Gmail do this for us. But early on, you could send anyone any email and it shows up in your inbox. So spam was going to be a problem. So they came up with an idea to essentially attach a digital postage stamp. You have to pay just a little tiny bit in order to send that email. And imposing a cost on that action would reduce spam. And the way that they came up with that idea was a proof of work. And the proof of work was your computer has to run some computation cycles, which consumes resources in the form of energy and bogging down your computer. And that little bit of cost essentially solved the problem. So now we have a way to pay for an action in cyberspace that can't be, you can't forge it essentially. Okay, you combine that. Now you have peer-to-peer networking made popular by things like, what's it called? First we had Napster, then we had Kazaa, we had all these centralized file sharing services. Those got nuked because there's a centralized party. If it gets too big, shut it down. Okay, then we have BitTorrent, a peer-to-peer file sharing service where you can go take down a domain and two more pop up the next day. And because it's distributed, there is no centralized party, that type of architecture persisted even against attacks. Okay, now you have proof of work, you have peer-to-peer networking, and we had some other examples of creating a form of private money or non-state money like e-gold. Okay, e-gold was essentially put all the gold in a vault, and then individual users can trade gold for dollars or whatever you want to trade it for. And the centralized party just updated a digital ledger to decide who owns what. Cool, that's a early way to imagine digital money or non-state money. However, again, it becomes popular. Men with guns knock down the door. E-gold's gone immediately. And so Satoshi comes up through the cypherpunks. He starts to put these pieces together. He sees centralized situations don't work. He needs to figure out a way to reduce spam or denial of service attacks, and he needs a way for this thing not to be shut down through any other way. So he combines all these things, and I think the best way to think about Bitcoin is not like a blockchain is not new. A time-linked database is 50 years old. And what Satoshi did was he took these little technologies that had other use cases and he merged them together in this sort of Frankenstein way. And the sum total of those parts creates Bitcoin. But the parts of Bitcoin that we like it's hard to change, there can only be 21 million, you can send it to anyone, no one can stop you, et cetera, et cetera. Those are not properties that you can just install in a system. Those properties actually emerge out of the parts Satoshi put together, combined with the incentives that act on us as humans. So you have human greed, human desire to better yourself, combined with an incentive structure in Bitcoin, which then allows the emergence of a 21 million cap. Obviously, we can just fork it and add tail inflation anytime we want. But will the holders of those UTXOs in Bitcoin today be interested in nuking their holdings to create another system? No. And so, yeah, that's the part that people get frustrated with or get hung up on, especially early on. They're like, it's open source, you can fork it. Sure, but the market's not going to value that lesser fork. And so, point being, Bitcoin is not a blockchain. It's a combination of all these things together. One more, what's it called? The difficulty adjustment. This is an elegant way to solve unknowns in the future regarding compute. Okay, if we 10x our compute tomorrow, won't that just allow those new miners with the better machines to take over the network? Enter the difficulty adjustment. So every 2 weeks, the system normalizes. And people think this is mind-blowing, but really what the difficulty adjustment is, it's just a thermostat. Okay, you're setting the temperature on your thermostat, and if it's out of range, then your HVAC system turns on and heats it up or cools it down, right? Raises or lowers the difficulty adjustment. So again, it's just piecing together systems that we've already come up with in a unique way. And that doesn't take away from Satoshi's genius. I think it's fair to say pretty much all inventions are derivatives on previous work. What I think is special about Satoshi is he understood the human psychology side, the built-in viral loops, and the way that humans would approach this when they learn about it. And I think that's really the magic. I think the other smart thing he did was he made it simple. It is what it is. It is a dumb protocol for moving value around, compared to something like Ethereum or the ilk that came afterwards, which was we want to do everything all on one chain, all on one layer. And we saw that obviously doesn't work. Ethereum goes to L2s. Now the Ethereum system or ecosystem is as bad as I've ever seen it since I've been around. So yeah, shout out Satoshi.
You're hitting a lot of threads here that I want to pull on, Brandon. I'm trying to think of what to go to first. I love that, kind of the elegance you describe of the difficulty adjustment and the thermostat analogy. Yeah, there's a lot of like inputs that go into Bitcoin, and obviously the 21 million number. I think Satoshi himself kind of alluded to the fact that it was essentially arbitrary. So there's obviously some tweaks to Bitcoin that you could potentially, when thinking about it or crowdsourcing the knowledge of it, if you were to make Bitcoin from scratch, if let's say it's 2008, Bitcoin hasn't been released, there's a way you could potentially make it better. But is it just the network effect that Bitcoin built so rapidly that makes it, the superior digital capital, digital money for the world?
Yeah, so I think a couple of things here. You're right. The 21 million hard cap is totally arbitrary. The 4-year halving cycle arbitrary. All the variables are arbitrary. But the part that really matters out of that incentive system is the fact that number one, it's hard to change. So in order to get people to move their value to a new set of rules, you need a majority of those users to take that action. And when the rubber meets the road, that's really hard to get people to do. And so that's step one, hard to change. And that is diametrically opposed to our fiat system and all other quote unquote crypto projects, where you elect a council of smart people. The smart people make decisions for everyone because they got the best data and the most PhDs. And I think that is the fundamental flaw in trying to manage the money supply. Every civilization, everyone who tried to do this since the beginning of time has eventually printed their way to oblivion. It's like Sauron's one ring to rule them all. The power is too great, and when push comes to shove, you hit the printer button. Part of that's due to the flaws of democracy. Hey, vote for me, I'll give you free money. And if you do that for 50 years, you erode the governance system. And the other part is you might print the money for a good reason at first. Hey, the barbarians are at the gate. We need to raise money or our entire civilization is gone. Okay, that might be a good reason to raise money. But if you can if you can print the money at will, what stops the powers that be from manufacturing crises to print the money? What stops you from doing that when you don't actually need to, right? And so the incentives lead to the money printer. Satoshi essentially says that is too much power for humans to control. We're going to outsource the mint to an algorithm, and that algorithm will do a better job over the long term. Now, it also means that Bitcoin cannot respond to short-term volatility in the market, where the central bank can adjust interest rates, right? They have little ways to manipulate the market. Bitcoin cannot. And so what that means is Bitcoin will have more volatility in the short term showing up in its price, way more than fiat money ever could. But at the systemic level, because Bitcoin doesn't respond, or you could say over respond to market conditions, then you have more systemic stability. Because every time you adjust the market, you manipulate the market, what you're doing is you're suppressing volatility, you're suppressing risk. You're essentially just taking the foundation out of this tower, and it leads you to a higher risk of a systemic blow up later. Okay, we deregulate the financial system in the 90s and the early aughts. That paves the way for the housing collapse in 08-09 global financial crisis, right? And in Bitcoin's terms, it's blissfully unaware of short-term changes in price, and so it can't respond. And the positive externality there is a more stable system on the long-term side. I think you had another question in there. Also, one more point. I think digital scarcity is the key innovation that led to Bitcoin outperforming all the copycats. Like, yeah, of course it's first. It has the best genesis story. No one was became unfairly wealthy due to the system, unlike pre-mines or other forms of distribution. So yeah, there's a better genesis story. It's more fair. It's more believable. There's a better mythology. But I think creating digital scarcity that the market believes is credible, and I think it's fair to say the market does believe 21 million is credible. Maybe some ETH guys are like, you need a tail emission, you need a tail emission. And there's a chance that that's true. However, I think that ETH boys are either willingly or unwillingly naive to what proof of work is and how it can adjust, how it can adapt. So I think they missed something there. I think there's some motivated reasoning for their bags. But yeah, so digital scarcity and hard to change. Those are the two key things that Satoshi brought.
Really well said. Pulling on that thread that you talked about, potentially forking off Bitcoin, as we've seen, a lot of institutional players come in, and obviously, I think Bitcoin is obviously economically distributed enough that it's not currently susceptible to some sort of shenanigans with a fork that would, structurally change its scarcity properties or something else at a fundamental level. But it's possible we're moving towards a world where there is more and more centralization of coins. You've got the ETFs, you've got a lot of like traditional finance players who are starting to grok Bitcoin and accumulating coins. You've got treasury companies like Strategy specifically. They're probably going to cross over the 1 million coin threshold, which, like it or not, 5% is still, a pretty sizable amount of the network. Is there a point where centralization is a concern to you, in that, a bunch of economic actors get together enough to cripple Bitcoin, where they want to fork and they're willing to sell, OG Bitcoin into the market for their new coin, whether or not the new one's called Bitcoin or not. Is there a real risk there, or is it just a game theory thing that protects Bitcoin at this point?
Yeah, this is a good question. So, the way I see this is, yeah, the concentration risk of who owns the supply does matter. And there probably is a threshold that we cross where that risk of, let's say, a state level actor nationalizing strategy, nationalizing Coinbase, trying to get their hands on the supply. I think the risk of that is real. I think you have to weigh that. You mentioned game theory. I think you have to weigh that type of attack against the economic outcomes of that situation. I don't think there's a world where that's good for Bitcoin's price. So then you'd have to assume that, let's say the US government wants to harm Bitcoin, hurt the price, and then control the system on a deeper way than they could right now. That's possible. I don't think that the incentives are very strong to do that, though. I think our government would rather enrich themselves than harm Bitcoin. Now, 10 years ago, I think the calculus would have been very different. And the number one risk to Bitcoin for its first, I don't know, 10 years, maybe 15 years, would definitely be a state level attack. And the fact that we never had an outright attack, yeah, mining ban here, some regulatory attack there, debanking, whatever, those are little skirmishes. And the fact that no state level actor made progress attacking Bitcoin up until this point leads me to believe that we're kind of past the point of no return. I do not see a head on attack. I could see a attempt to neuter Bitcoin, to reduce privacy, to concentrate supply and give us paper IOUs. I think all those things have a decent chance of being tried. And as Bitcoiners, we should be vigilant about that. Okay, what do we do about it? People like OG or hardcore Bitcoiners would say everyone must do self custody. And that's a nice thought until you start talking to normal people who write their password 123. They don't use a password manager. They can't be bothered. And so I think and same is true with privacy. We have no digital privacy and no one cares, right? And so I think the reality is maybe 5% of Bitcoin holders at maturity will decide to run their own custody. However, the question is not the number of users. The question is what percentage of the supply is held in self-custody versus a Coinbase or otherwise. And so luckily until this point, I haven't checked the numbers in the last few months, but still the majority of the supply is held by individuals in self-custody. Now, the trend is definitely concerning. What do we see in the last few years? We're seeing OG retail selling coins and Wall Street buying them up. So we're definitely seeing a rotation there, which is a little bit concerning. Something to be vigilant about. I also think we need to mention that the ETF, yeah, coins are held in Coinbase and BlackRock issues the product. However, individuals still have a claim to that ETF share. So in order to pull this off, we would have to expect the government to do something akin to a 6102 attack like FTR did, making owning gold as an individual illegal. And I would like to say that that's not possible, but we're entering a period where we're at the end of the long-term debt cycle. You could call it a great reset, a monetary reset. We've gone through many, many, many of these throughout history. And when we enter these type of conditions where the government's bankrupt, what do? They try and find ways to acquire assets. And in this situation, our assets are looking very tasty by our governments right now. And so I think the risk is increasing that those type of things would happen. But again, I think it's better off for the government just to own it and acquire more and tell everyone they're buying it and get rich rather than try to attack it. It's like the golden goose is already in the US. Most of the mining, most of the companies, we have an unfair advantage by leaning in. And it seems like that's the path we're going to take.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Cold Card Q is an absolute powerhouse for serious Bitcoiners. With a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Yeah, it seems like the incentives are there for the U.S. government, and you kind of hope there's not a world where another major nation embraces Bitcoin before the United States on a sovereign level. I mean, there's already overtures by the U.S. government. The current administration says we're not going to sell our Bitcoin. They've teased a Bitcoin reserve, which I think maybe a ways off. But I could see if there's a world where other sovereigns adopt Bitcoin first, that might be hostile to the U.S. That might be the world where the U.S. government takes a negative or a more hawkish approach towards Bitcoin, which would be bad. But I think generally I'm bullish that because, like you said, so much mining happens in the United States, so much Bitcoin industry is in the U.S., so many individual holders are in the U.S. That makes me pretty positive on the long term outlook from the U.S. government's perspective.
Definitely. They want tax receipts from capital gains. They want the stable coin industry to buy up treasuries because the market's not bidding them. And yeah, they kind of lump it all together in a way that it's strategic now to support the industry. There's no other choice.
Right. A lot of us get into Bitcoin for different reasons. Obviously, the pump my bags narrative is always there. There's a lot of I think ethical reasons why fixing broken money with a monetary system like Bitcoin just is basically the antithesis of fiat that we've seen just ruins everything. It is so important to so many Bitcoiners, and I think you've talked actually a little bit about like personality types and looking at surveys there and why certain personality types get into Bitcoin. Maybe we can touch on that down the road. But do you when thinking about the transformational impact Bitcoin can have on society, maybe in a more hyper Bitcoinized world or a fair world where Bitcoin might keep central banks in check or might keep the money printing in check. Do you lament, I would say, loss of that cypherpunk culture that was in and around Bitcoin in the earliest years? I think that narrative, while obviously still a narrative and something that is important to me, like politically, are we losing some of that? Is that always inevitable as Bitcoin becomes more distributed? And how do you look at that, Brandon?
Yeah, it's a good question. I would say this is probably the central claim, lament, pain argument on Bitcoin Twitter over the last, let's say, 3-4 years. Early Bitcoiners see this like anti-state, screw the banks, we'll do it ourselves, etc. And I think that revolutionary energy is what brought me to Bitcoin. I lied. Number Go Up brought me to Bitcoin. The revolutionary energy to change the world for the better by taking money printing out of the state and giving it back to the people, that's what kept me in Bitcoin. And I think that's true almost unanimously in the first 10, 15 years of Bitcoin. And yeah, we saw a massive shift in that over time. I would say the treasury companies contributed, the ETFs, Wall Street getting comfortable. You see people who formerly had those cypherpunk values sell out to get paid or sell out to Wall Street or whatever you want to call it. However, I think the reality is if Bitcoin is the best money in the world, then eventually everyone's going to want to use it. And we're experiencing Wall Street participate now. We're experiencing this great financialization period. And so that was always going to be inevitable if Bitcoin was going to win. Now, it doesn't mean it's unanimously good, but it is a step on the adoption curve. Like personally, I think the heyday of Bitcoin culture was like 2017 to 2022, somewhere around there, where it's past this like internet curiosity phase. The community is growing. We're attracting incredible minds doing cool things to support this project, and we haven't quite been financialized yet. The content was philosophical. We're trying to figure out what it is, and we're learning about what Bitcoin is every year, and we're sharing it. Super fun. Then we financialize, and all of a sudden the culture fractures. You've got Noster, you got changing hands on Twitter to X, the community fragments, and now we don't really have this like the nucleus of Bitcoin is no longer cypherpunk energy. That energy is severely diluted, and yeah, that changes the culture, changes the vibe. But again, if you're arguing against those changes, you're essentially arguing against adoption of Bitcoin. And so it's a sign that we're winning, but that also means the stakes are higher, the risks increase. And so it does put more responsibility on the cypherpunk energy folks to continue to build tools that allow Bitcoin to be used in a more cypherpunk way. The banking system, the fiat system, they're gonna squeeze out any of the revolutionary energy to make easy to use products, and that's fine. We want new people to have an easy on ramp. Not everyone needs to read The Creature from Jekyll Island in order to buy some Bitcoin, right? Like this thing is just money, and then the question becomes like, yeah, we have a responsibility to be vigilant. Always true. We can't rest. Um, but at the same time, like, what are we gonna do? Like, I don't know. I find the whole argument just screeching into the wind. It's like whining about some like, hey, I used to love this band, now it's popular and now it's not cool anymore. I think it's mostly that human instinct applied to Bitcoin.
Yeah.
And yeah, like continue to build the cypherpunk tools. We need those tools, but most people are not going to use them, and we have to make peace with that. And the question becomes, was Bitcoin designed in a way to survive the financialization event? If the answer is no, then Bitcoin was always going to fail. And I don't believe that's true. I think Bitcoin is as resilient as we could have possibly made it. And I don't see signs of it being compromised at this point. I see signs of privacy being attacked. I see signs of self-custody becoming harder to convince people to do. But self-custody is not that hard. It's just humans are lazy and the ETF is easy, right? And so we have to overcome the human nature, which I don't think is possible. So all it comes back to build the tools for the cypherpunk type use cases. And when people need those use cases, they'll use them.
Yeah. If you were to steel man, I guess the world where Bitcoin does fail, um, is it surveillance or like what pitfalls do we need to avoid? As people who use Bitcoin and Bitcoiners who, whether it's people in treasury companies, people building the cypherpunk tools, anyone in and around the ecosystem. I guess what do you see as the ways Bitcoin can still fail, and how do we guard against that?
Yeah, I don't see a world where Bitcoin fails in the sense that price goes to zero. I think that the fail mode that we're protecting against or we should be vigilant against is simply losing the cypherpunk parts of Bitcoin. Or those get squeezed into a black market, gray market area where 99% of Bitcoin usage is through custodians. And I also don't think that that's necessarily a failure as long as 1% of the use case or whatever the number, as long as we can still transact peer to peer, as long as we still maintain the ability to self custody if you want to, then Bitcoin won, right? In the first 2 years of Bitcoin in the Bitcoin talk forums, all the founding fathers of Bitcoin were having discussions around Bitcoin banks. Bitcoin is high powered money. We should use it as collateral. And that is the way the system's designed. And so, again, it's just having a carve out to use it in the cypherpunk way, but accepting the fact that most people won't.
Yeah, you talked about BitTorrent earlier as like being the decentralizing force on peer to peer file transfer. Is there a world where Bitcoin becomes BitTorrent? Do you think BitTorrent failed? It still is widely used, but I think it's become kind of a niche protocol. Does Bitcoin? It's a different. It's definitely a different technology, but is there a chance Bitcoin, follows that fate in some sense?
Yeah, it's a good question. I think BitTorrent exploded in a time where that was legitimately the best way to acquire media. But what took down BitTorrent was no attack. It was creating streaming services at a very fair price. So now you have Spotify, now you have Netflix, now you have all this stuff. So rather than go through the hassle of illegally acquiring media files, you just pay Netflix $10 a month. You pay Spotify $10 a month. Now you got everything. And so what would be the Spotify or the Netflix to Bitcoin? Um,
Central
maybe it's
banks being diligent and showing restraint, or what?
yeah, I mean that would be the nail in the coffin if all of a sudden central bankers get inflation under control and we don't have a need for this like hardcore Spartan money. I think the odds of that occurring are essentially zero. And so maybe the next most likely thing would be like everyone uses Bitcoin through like Robinhood or Venmo or something like that. You're not actually using Bitcoin, you're just trading digital ledgers on an internal system. And I think the odds of that are actually very, very, very high. But again, that doesn't kill Bitcoin as long as we still have carve outs to use it in the self custody way. And I think that threat of self custody is what creates the restraint on central banks. Because if they act recklessly, belligerently printing money, that shows up in inflation, that shows up in Bitcoin price appreciation. And it signals to the market, hey, money printers going burr, maybe you should own some more Bitcoin. And essentially every time the money printer goes burr, that catalyzes a whole new wave of adoption, either new people buying their first bit of Bitcoin or existing holders doubling down. And so it's kind of a paradigm or a paradox, sorry. The more governments print the money, the more Bitcoin adoption. The more governments try to attack Bitcoin and fail, the more you demonstrate the value case. And so I think the state level actors are essentially stuck and the only reasonable play is to try to benefit from this thing. And I think that's what we're seeing. So again, incentives from Satoshi.
Yeah, I think you think and both hope that you're right there, Brandon. I'd like to pivot and talk about Bitcoin treasuries. We're at bitcointreasuries.net here. I guess a couple things. In Pioneer Species, you talk about the difficulty adjustment culling miners that are the weakest miners. We saw a big a Cambrian explosion, as we kind of call it in the industry of Bitcoin treasuries. Basically IPOing or taking reverse mergers, and it came from a lot of Bitcoiners. It came from a lot of tourists as well who were trying to save their company in public markets by hopping onto the thing. We saw a lot of them do it in the AI industry as well, but some companies just came out and were like, "Hey, we're buying Bitcoin. We're raising X billion, $100 million to buy Bitcoin." And we saw a lot of capitulation in price as Bitcoin's price compressed over the last 6 8 months. And then we've seen some second, third tier Bitcoin treasuries say, "Okay, we're ending this strategy." And I think those guys are always pretenders, but there's a lot of treasuries. Um, that I think got in it for the right reasons, and I think the jury's still out on whether or not these companies succeed. I guess first of all, were you surprised by how the whole Bitcoin treasury phenomenon has played out over the past year, kind of mimicking Michael Saylor's strategy largely? Of course, there's differentiators there and people doing interesting things that we might get into, but is there a culling that was necessary as we saw this explosion in Bitcoin treasury companies?
Yeah, a lot of stuff here. So first, yeah, treasury companies out of favor. They're getting absolutely crucified in the markets. I don't think that's surprising. I don't think it's surprising that there are a bunch of copycats, right? Saylor went from like 5 billion to 100 billion in very short order. And anytime you see charts like that, there's going to be copycats. And so that's totally obvious that was going to show up. I think MetaPlanet essentially was the prove the rule, right? If there's only one, it could be a fluke. MetaPlanet starts pumping, people are like, okay, this thing's real. And fast money comes in, tries to seize an opportunity, and we see a bunch of these things pop up. Paper Bitcoin summer. Um, and do we need to call some of those? Yes. Those products are NGU or bust. If the number's not going up, no one gives a shit. And so as soon as the market turned against those companies, yeah, we saw an absolute bloodbath. And I feel very sorry for people who bought the top in size last summer because they got absolutely wrecked. Like, what does this mean going forward? Yeah, I don't think there's room for 100 of these things. But I think there is room for a few with slightly different strategies, slightly different market caps, people willing to take more or less risk, etc. I also think what's interesting is Saylor was trying to scratch his own itch. Hey, we're destroying capital. The business is growing at a rate less than inflation. So we're literally destroying capital every single year. We're destroying shareholder value. What are we going to do about it? He finds Bitcoin. Oh, let's buy some more Bitcoin. Then he does some converts, and then he does some of this and some of that. Now we're on these preferred perpetual equity products. And essentially, the whole market had to figure this stuff out in real time. And so we're learning what's the most capital efficient way to build these companies. Saylor's obviously the tip of the spear. Strive launched a similar product as well. Good for them. And I guess where I'm going with this is we don't really know the appropriate way to build these things. There could be new products coming out in the future. It seems obvious that these companies will turn into Bitcoin banks, or they will get acquired by front runners who aspire to be a Bitcoin bank. And again, this was discussed in 2010 in the Bitcoin Talk forums. And it makes sense. You have the best collateral in the world. You're going to find a way to monetize that collateral. But we're a little early to have some sort of a Bitcoin bank. And so really it's the market trying to figure out different ways to get capital into Bitcoin where they may not want the underlying asset. And I think that trying to answer that question is a worthy endeavor. And clearly these are popular products, not at the moment, but I think the demand will come back for these products. And so, yeah, I mean, I'm overall happy that it's happening in the same way that you couldn't stop it if you wanted to. So we might as well allow non-Bitcoin holders to get some exposure. But I think there is some sort of a narrative change here that I think is somewhat harmful to Bitcoin. If the new adopters come in for NGU treasury companies, and there were many people who bought MSTR before they ever bought Bitcoin, what does that do to the adoption curve, right? Those are harder to understand products. Many of those folks did really well if they bought early, and many of those folks got wrecked along the way. They don't know what they hold. And so I think it is a really bad initiation for new people to come into the market. But again, NGU rules all. Bitcoin's boring. The price hasn't been moving as much. And in a world where financially people are really struggling and they do not have hope for the future, that leads to a climate of taking extreme risk. No one wants to take their $1,000 and turn it into $2,000. They'd rather bet it all and hope for 100x or bust. And so I think that's kind of the climate we're in. And I think that connects nicely to where we are in the market cycle now, which is that for quite a while, Bitcoin was the highest volatility, highest upside, or crypto in general, for anyone speculating. And now that we have these AI companies just blowing up, the volatility there is higher and people are seeing these hockey stick charts. And so the speculative capital found a new game. And I think that directly competes with Bitcoin. And, in hindsight, that was obvious, but I didn't appreciate it in the moment. And so we might actually need a temporary local top in the AI space. People call AI dead, we're overbuilt, we're early, blah, 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 before we see a capital rotation back into Bitcoin. That's kind of how I see it now. And combined with that, like, if Bitcoin's not moving very much or down 50%, and then next to that, you're seeing S&P at all-time high and just buying random companies and they're all just going crazy, that really messes with people psychologically. And so we probably saw some long-term Bitcoiners throw in the towel over the last 6 months or massively decrease their position size. Yeah, it sucks. That's the reality we're in. Bitcoin's a big asset now, and there's competition for attention. So I think it's all expected. We're also filming this at like a 63K Bitcoin. So vibes are at an all-time low as far as I can tell. So it's very easy to call the obituary. And in a year from now, Bitcoin might be ripping again and we might be laughing at this conversation.
Right. I know. It'll be interesting to it's always interesting to watch back, a year later about what's the narrative in Bitcoin. And I do wonder how, to your point, what if Bitcoin chops around and we keep seeing, you know, tech just explode, AI explode for the next 6 months, is that another catalyst for another leg down in price? I talk with a lot of my friends and people on the podcast about, 50K Bitcoin is essentially a $1 trillion market cap. And to me, like, yes, that's a psychological number, but that just seems laughable with the amount of money bid by just the ETFs and Saylor alone over the past 6, 8 months, or past 2 years, really. For Bitcoin to go down to a $1 trillion market cap with hundreds of billions walking in the door just seems laughable. But strange things can happen in Bitcoin for sure. You said something that I've gone back and forth about, and I don't think I've carved out my position. And people in the Bitcoin treasury space that I talk to have a lot of different opinions on it. Certainly, the operators of these companies are bullish. They're a company in the industry largely because obviously they're trying to execute something similar to the Sailor playbook. I think there's some exceptions with like 21 or BSTR potentially who are trying to build like conglomerates. Um, or the Berkshire Hathaway of Bitcoin or something like that. We can touch on that too. But Sean Bill, Adam Back's CIO, for his company they haven't finished their de-SPAC yet, and they're sitting on some powder and going to be able to buy this dip. It looks like if price stays down low. But he said something to me yesterday that got me thinking. It was a little compelling, the analogy he made. He said, products like STRC and SATA, these so-called digital credit products that are paying a dividend, repackaging Bitcoin for essentially normies for retail at this point. I don't think the products are big enough for institutions to really step in yet, certainly. But for them to strip down volatility, and we'll see if it can hold up as Bitcoin's price gets tested, and offer, a 10%, 12%, 13% yield in the case of Strive's SATA product. He kind of likened that to the bond market in the 70s, when rates were, hitting their all-time highs under Volcker in the early 80s. That's when bonds entered the 40-year secular market, bull market that they were in. You built out, tranches of bonds that were priced. There was junk bonds essentially were born, and Sean thought that these Bitcoin treasury companies, and maybe he's early with this forecast, can really build out different levels of risk, different levels of credit risk in the marketplace. And he thinks there is a lot of, not just for Bitcoin treasury companies, but a lot of room for these issuers of, preferred equities in the marketplace that are pseudo bonds collateralized by Bitcoin. Do you have a take on that? Is that something that's you have an opinion one way or the other on, Brandon?
Yeah, I don't understand the credit markets deep enough to have strong opinions on any of this stuff. But my take is that, yeah, most of the credit market or a large percentage of the existing traditional credit markets are returning negative real yields. And so if that's the environment we're in, I think it's only a matter of time before fixed income investors allocate to products like Strive or like SGRC, I mean, or SATA. Yeah, I mean, I think that seems obvious that they're going to go down that route, but I don't think they're going to be in a hurry, right? I'm not sure. I didn't check SGRC today, but it was trading at 95 yesterday, I saw. And that would worry some folks who are considering a large position in these products, and it should, right? And so I would expect Saylor to mostly sell those products to retail for the next few years. But if Saylor survives this, we get another bull market and credit conditions don't change, which I don't expect them to. I do think products will be bought up by institutions over the long term. It seems obvious. I also think you have a ton of people who are approaching retirement who like Bitcoin, and they might rotate some of their fixed income products into SDRC. That's probably a large part of the demand right now. And that just seems like a good product. assuming the mechanistic aspects play out and say there's not a forced seller or these products don't blow up. And so, yeah, the more history those products have on their side, the more likely the institutions come in.
Yeah, that's my base case. It's like the real success of these products are in 3 years. Sailor, showing resilience through bear markets, and having these products hold up. You've got Sata's product, which is really revolutionary. There's no dividend on the planet that pays more frequent than monthly dividends, and they went. Within a few months of issuance, this month they're moving to daily dividends, and that's like, so cool to see a Bitcoin company on the forefront of that, getting Nasdaq to change their rules so that they can have those record dates every single business day in the market. So I think, yeah, even if the demand doesn't come in right away on that product, I'm sure they'll be able to raise, a couple $1 billion over the next year or two. But if we get through, if they get tested with a lot of volatility in Bitcoin's market, and that product holds up pretty well, I think you're going to see a lot of attention from maybe high net worth individuals, family offices, day traders who want to park cash overnight. And then, as the size scales, that's when institutions are like, okay, we can really pay attention to that. So yeah, Sailor always calls it the seasoning of these products. You need that time, like you said, Brandon, in the history. So that'll be something to monitor. When you think about the financial engineering aspects of Bitcoin treasury companies, Sailor's found a bunch of levers to pull in capital markets, different ways to raise money with his common equity, with his preferred equities. He had convertible notes. They still have some on the books, but it looks like he's abandoned that strategy. Maybe he comes back to it. If the company does come under some stress, but that's not his base case. That's not my base case. Do you see that financial engineering as kind of symbiotic in the growth of Bitcoin, where you said people coming into Bitcoin treasuries, are getting a really like rough initiation, especially if that was their first real exposure to Bitcoin. The other side of the coin is that Sailor's helping people who otherwise wouldn't take the orange pill have an orange pill, and if they can hold on through the through the price testing, I think, and you have success on maybe a trade or investment in strategy in a Bitcoin treasury company, you're going to dig into the underlying asset and really, we all go down that rabbit hole, right? The longer you hold Bitcoin, the more you want to know about it. It's just attractive. But is the financial engineering symbiotic, or is it parasitical, do you think, in some ways to Bitcoin's adoption?
Yeah, I think on net, it's for sure accretive to the adoption. New people, first time buyers come to SDRC or MSTR. Yeah, a decent percentage of those will end up holding Bitcoin underlying asset. They'll be steeped in the Bitcoin orthodoxy. They'll experience this bear market and wonder maybe they should have held some Bitcoin or whatever. And so, yeah, definitely, I think it's net accretive. Um, I think it's the same with shitcoins. Like I was enchanted by Ethereum in 2017 way more than Bitcoin. And that's due to naivete, but it worked. I believe blockchain, all the things, decentralized all the things, all this general purpose technology, which was obviously a mistake. But myself and many, many, many others in 2017 came for the same reasons. So numbers going up, Ethereum has a good story. I didn't understand Bitcoin. I didn't understand monetary theory well enough to grasp the value of Bitcoin, but it worked, right? And so I think anytime you're bringing people into Bitcoin, it's good. And I think if Bitcoin's price did well or did better over the last 4 years, I think the Sailor hate would be way, way less, right? But because we're all frustrated with price and doubly frustrated because we could have just closed our eyes and bought an AI stock a year ago, I think that contributes to the animosity to the treasury companies in a huge way. And so if we get through this phase and Bitcoin starts ripping again, I think people will all of a sudden not care about those things, right?
Yeah, well said. So we've talked about the culture wars within Bitcoin. I kind of view some of what's going on as like this kind of cold civil war between some Bitcoiners who are, supportive of what Sailor's doing in the marketplace, supportive of what companies like Strive are doing. But you have some like Bitcoin OGs who still encapsulate that cypherpunk ethos again, which I am extremely steeped in, sympathetic to as well myself, who, just are like, if you're not self-custodying Bitcoin, what are you doing? And I think you kind of like maybe you tipped your hand on this, saying, go build your thing if you're into that. Sailor, do your thing. Is that where you land? Is like everybody should be building? And why do you think there's this friction? I've seen, I'll name a couple of people. I've seen Parker Lewis talking a lot about this on X. I've had him on the podcast, and he's, he doesn't like a lot of the marketing around Sailor's products. Matt Odell has called out. He's been on the podcast as well. Respect him greatly as well, and he's called out, kind of what's happening in the treasury space. How do you think this resolves itself? Does it need to? And do those narratives really matter?
Yeah, it's kind of the central theme of the whole conversation, your question there. Um, I think some history here. Bitcoiners in general are ideologically motivated. Our haters would call us religious zealots. We worship this financial asset, and that really bothers traditional financial people because they're trained to never marry your asset, make good decisions. If Bitcoin's not doing what you thought, you should dump it, buy the next thing, etc. And so the Bitcoin community has this ideological bias, and I think that's primarily what's showing its head right now. We have this idea to make the world better through better money, and I subscribe to that, and I think all the Bitcoiners do. And then you see people what looks like chasing riches over the ideology, and I think that's kind of the cardinal sin in Bitcoin. You can see how we eat our own anytime someone puts their name on they get shares in some treasury company, or they start a VC fund and they invest in something tangential to Bitcoin, and everyone loses their mind, right? And so I think the primary source of that animosity is the fact that we are religious zealots. And when you see your peers who you thought were religious zealots going against that orthodoxy, they're now heretics. And that's the worst enemy in the world, is a traitor in your own crew. It's way different if Wall Street hates on Bitcoin, you expect them to. But if it comes from the inside, it hurts more, right? So I think that's the realistic nucleus of the issue here. How do I think it plays out? Does it need to resolve? I don't think so. I think there's no world where we go back to the what I consider the glory days of Bitcoin. I think that ship has sailed. And I think we're going to end up with the world of many different communities. I think that was always true, but it's more obvious now. It's more glaring now. And so I think it's inevitable. There's nothing to resolve. And I think it's a natural step in Bitcoin's history. It doesn't mean I don't dislike it personally. I hate it personally. The enjoyment I get on Twitter is like 10 times less than what it was 5 years ago. But if I'm being realistic, that's just me clinging to something that doesn't exist anymore. And we should embrace the future. And yes, we should build cypherpunk technologies, and we should support that as much as we possibly can. Because if we lose those things, then Bitcoin could get swallowed up by the machine. Number goes way up, but in like 50 years, Bitcoin's totally neutered, and we just have another synthetic gold thing that's controlled by the state. And I think the risk of that is real. Satoshi was quoted saying things like this. He said, I'm going to butcher it, but paraphrasing, something like, at a minimum, Bitcoin buys us time in the arms race against centralized money printing, right? If you look historically, monies either blow up due to printing, or monetary technology gets outcompeted by newer technology, right? I think gold lost its monetary privilege because it's a physical metal that makes global information age economies hard to work with. And so I think fiat money won in the market, and also it has an unfair privilege at the money printer. And your book behind you, Broken Money, Lynn Alden makes a strong case of this, and everyone should read that book. It's great. But essentially, yeah, that's how monies die. And what I think is the biggest risk for Bitcoin is, call it second, third generation curse, right? The early people realize how broken the money is, so we fight hard to free the money from the centralized money printer, give it back to the people. And then 2-3 generations go by, the early folks get rich, they hang up their fighting shoes, and future generations don't ever remember a time without Bitcoin. They don't remember a time in pure fiat money. And so they sort of lose the vigilance required to keep this thing going. And I think that's the right way to think about it. Like, we're shepherding this new monetary invention, and we need to get it big enough not to fail. I think we're at that stage. And the next phase is like, do we need some sort of weird religious entity or like a council of elders to pass on the wisdom through the generations? I don't know what that could look like. There's lots of risks in there, but there does seem to be a long-term risk here where we just sort of give up the fight and we allow the slow capture. And yeah, I've got a long essay exploring this that I haven't published. I started it like 4 years ago and started a family and haven't gotten much writing time since. But that is a topic I'm very interested in, and I think the risk is real.
Yeah, that's cool stuff. Sounds like you think the great filter for Bitcoin is potentially ahead of us. What about how, let's end on a fun one. Speaking of great filters, do you think the great filter for humanity, of course, like for our viewers who may not know, the Fermi paradox is, um, basically why what with so many stars and galaxies out there, why don't we see evidence of human life out there? And some of the solutions that have been posited is that there's a great filter in humans evolution that civilizations can't get past. Do you think that's behind humanity, Brandon, or do you think that's about ahead of us? And is there any role Bitcoin could play as a potential great filter?
Yeah, I love this question. So, before we had all this like disclosure stuff coming from the US government where they say there's aliens, we've seen them, we have their crafts. I don't know what's real in that or what's some sort of a psyop type approach, but it seems that there are other intelligent life in the universe. And maybe 10 years ago, I would have thought that the Fermi paradox was behind, or the Great Filter was behind us, because maybe it's really hard to get to multicellular life. Maybe it's really hard to get to what we consider conscious life now, going from the apes to the humans. But it seems like we're not unique there. And so if I had to say today where I think is the greatest great filter, because there's obviously multiple points in the evolutionary curve that would be harder to achieve. What it seems like today is that multiplanetary species is the most important great filter to get through. And I say this because the more we learn about long history on our planet and we learn about the great cataclysmic events, of which there are many, like we know about, oh, meteor destroyed the dinosaurs 65 million years ago, but there's been tons more. As recent as 11,500 years ago, we had a great cataclysmic event that ended the previous ice age, essentially a transition period between ages. And we found incredible megalithic structures created around that time or before that time, which lead me to believe that humans were alive and well, global civilizations, advanced technology, not necessarily silicon chips, but way more advanced than mainstream archaeology suggests, which is that we were hunter-gatherers and we invented agriculture 10,000 years ago. Total nonsense. And so it's my belief that either asteroids or changes in the sun or changes in our magnetic shield leading to geomagnetic excursion events, right? There's this whole category of natural phenomenon that wipes out a planet. I think it's extremely likely that those events will continue because they've been happening nonstop since. And what that means is if we're a single planet species, one of those events would essentially wipe out modern technology, modern civilization. Who would survive that event? The remote tribes in the Amazon who don't rely on a globally connected world to survive. And so maybe it doesn't kill our species entirely, but it could. And so to me, the future must be multiplanetary to reduce that risk. The moon is better than just on Earth, but Mars is a lot farther away. That gives me a little more confidence. And so the more we spread out, the lower our risk of being destroyed. Now, does Bitcoin play a role? I think so. I think Bitcoin helps anchor civilization in a monetary system that supports long-term growth. And I think that's important if we're going to reach the stars, because those are massive human achievements. And the better the money is, the better our chances of those things being true. I also think that once you leave Earth, the idea that we would use dollars on Mars is quite laughable. And so I think there's a world where we use digital money in space. And Drew Bonsall from Unchained has done amazing work on this topic. I highly recommend reading his Bitcoin Astronomy series. But he was describing how you would need a second layer solution between Earth and Mars. And how would you do that? Well, speed of light prevents an issue, or prevents synchronous ledgers between Earth and Mars. There'd be some sort of a delay. So he hypothesized Muscoin, which would be a hypothetical layer 2 lightning network or whatever, layer 2 on Mars. And then you'd almost need another like interplanetary settlement layer to settle between different bodies in space. And so I think digital money makes sense in space. And I think that better money helps us achieve large human endeavors.
Awesome stuff. Really cool. We'll have to dive into this more in detail at a later time, Brandon. Elon, if you're listening, I think you've got a compelling reason to buy more Bitcoin with Tesla and SpaceX. You know, if you're going to build that Musk coin on top of it as a layer two. Brandon, plug your stuff. Tell everybody where they can find you.
Yeah, absolutely. You can find me on Twitter, Quittem, so B and then my last name. DMs are open. Come say hello if you have questions, thoughts. I'd love to hear from you. I've been at Swan for 6.5 years. I oversee client services and overall client experience, some other stuff. Help out with IR, help out with marketing stuff. And proud of what we built over at Swan. So if you live in the US and you want to start buying some Bitcoin, check out swan.com. I think I'd like to point people to Swan Private, which is our concierge service for people looking to buy larger amounts of Bitcoin. Sometimes getting into Bitcoin makes you feel isolated, your peers aren't interested. And what Swan Private offers is one-on-one support with one of our reps. They can help you make decisions, think through your portfolio, taxes, inheritance, all that tricky stuff that you might traditionally get from a financial advisor. We're not financial advisors, disclosure, but you get a lot of that similar type of service to help allocating to Bitcoin go smoothly for you. You can also buy Bitcoin in an IRA if you want tax advantage Bitcoin. We have a 2 of 3 multi-sig product, which I think is the ideal custody solution for the vast majority of people. So you hold 2 keys as a client, Swan holds 1. If you lose a key, we help you out. So it's essentially self-custody with a get out of jail free card with Swan as a service provider. So that's what I'd recommend. If you have questions about Swan, Bitcoin, Mycelium, any of this stuff, come say hello.
Yeah, check him out for sure. One thing I have everyone say before they leave, Brandon, is stay orange.
Stay orange.
Love it. Ladies and gentlemen, Brandon Quittem.